Welcome back, everybody, to FinBear's channel. Today we're going over financial lingo. This will be the second in our series, and let's get started. Technical analysis. So technical analysis is both used for stocks as well as crypto. Everything I'm about to talk about can work for mostly stocks and then a little bit of crypto. So technical analysis is when you're looking at the chart. So if you have the chart with the candlesticks there, the red and the green, and you're like, what am I looking at? That is technical analysis. You're watching the chart patterns because the market has a really good memory. And there's different indicators you can use, and we'll go over that in more detail later. But when you're hearing people talk about technical analysis, this is what they mean. It's what is the chart telling you? What are the patterns? What's the RSI telling you? The MACD, the stock, all those cool things, the VWAP. Again, those are all things we'll discuss later, but that's what technical analysis is. Fundamental analysis. So if you do a fundamental analysis on either a crypto or a stock, what you're doing is looking at, for crypto, the tokenomics. What's going on with it? What is it about? What projects is it tied in with? What is the burn rate? What is the total supply? What is the volume for it within how much has been traded and such? For stocks, it's what's the company about? What are they doing? Anything new happening? Anything bad happening? Tesla, they're in a whole new sector that they're creating. AMC is supposedly on the way out, but we all know as apes that's not the case. But that's what you're looking at is fundamental analysis. How much money are they making versus how much debt do they have? If it's a pharmaceutical company, what drugs do they have in the pipeline? What thing's going to make them get from, today to the next 5, 10, 20 years? That's fundamental analysis. Next is sentiment. Sentiment, I actually feel, is separate from fundamental analysis. Now, back in the day, when I first started, it was only technical analysis, TA, and fundamental analysis. And sentiment was piled in there with it. Now, I keep sentiment as something separate. And honestly, in not most cases, but some cases, I'll take sentiment as stronger indicator than fundamental or TA. A big example of that would be a short squeeze play. Sentiment is a big thing, like Dogecoin. Dogecoin is not a short play, but Dogecoin was a big mover because of sentiment. Fundamentals made no gosh darn sense. It just doesn't. But sentiment, because so many people were buying it and everyone was getting on that fast train, price went up. I mean, Dogecoin was supposed to be a joke. And the TA even said, technical analysis, like, yeah, we're not going to hit over a penny. What the heck? And then, boom, craziness has happened. And that's why sentiment is so strong. Another example is AMC and GameStop. Prior to 2021, people believed, because of fundamentals, like GameStop and AMC were on the way out. But because of deep freaking value, I'm not going to curse, and some others who decided, hey, this is a really strong value play, there's a lot going on here, based off their fundamental and technical analysis, it actually got more people on the bandwagon to drive up sentiment. And so now you can't go anywhere without people talking about apes, Wall Street bets, all of that. The more people are talking about a short squeeze and how many people are buying, that's sentiment. When sentiment is like the volume too. So when you see how many people are, like, how much volume is happening on an intraday trading, that's telling you that people are very bullish or very bearish about something, and sentiment ties into that. So that's what sentiment is. A market order. So a market order is when you buy a stock price out in the market. So you just hit buy, and whatever the best price is within that time frame is what you're going to get. So sometimes you might see a stock price at $1.20, right? But there's a lot of momentum happening. There's a lot of people buying. So even though you hit buy at $1.20, because you put in a market order, that $1.20 could actually come back to being a purchase for $1.70, $20, $5, $1.18. It really varies based on how much momentum is going on. But typically 90% of the time, when you hit market order, you're going to get within a 5-cent range of what you put in at. That's what a market order is. And the same is said for when you pull money out, when you hit sell in a stock. So if you just hit sell, just a straight market order sell, the price might be at $20 and you want to get your $20, but because so much is happening during those seconds, even though you put in there for 20, that market order might fill at $19.95. It might fill at $23. It might get lucky. So that's what market order is when people talk about that. Buy limit. So a buy limit is when you put in an order. Remember how we just said a market order? You put and you buy, and this is going to give you what's the best price at that moment, right? Well, sorry. A buy limit is actually when you put in a specific price saying, hey, I want to buy 20 shares at exactly $20.01. So if and when that stock hits $20.01, it will then purchase and fill those 20 share order that you requested, which is really cool, especially if you see a price going at, like, for example, last month AMC was at $10, but sometimes it dipped down to $9. I might say, you know what, $10 is a little bit of stretch for me. I think it's going to dip down to $9.95 or $9.85, but I don't want to watch that screen nonstop to hit that market order. I'm going to put a buy limit in for $9.95, and so when market hits that, you'll get your thing, which is pretty cool. Now, what you want to be aware of is the spread. So sometimes you will hit $9.95 because you have the bid and the ask price. That's something I'll go over in a little bit more detail in another video. But there is a spread. So even though you might see the chart saying, hey, you know, my thing hit $19.95, why didn't it buy? It's because you didn't hit the spread. So you got your bid and your ask. The ask is how much people are willing to sell it for. The bid is how much people are willing to buy for it. And I might have that inversed, sorry. But because of the spread, you know, price went up and down, but it didn't hit your entry point, so you might miss out on it. So you just want to be smart about it. Don't get too greedy, and it's a really cool tool. I use it a lot. Sell limit. So sell limit has the exact same concept as a buy limit, but for selling. So when you hit a sell limit, what you're doing is you are setting a price higher than what the current price is, right? So if something is right now hitting $20, but you think it's going to hit 27, you can put a sell limit in for $27. And so when price does eventually hit $27, it will then close your order. And however many shares you want to sell at that point will then happen. And again, don't forget the spread, but because that will be factored in. But the spread is normally just a few pennies, unless you're doing a big stock that's like $700 a share. Spread might be a couple dollars. But that's basically what a sell limit is. Same concept as a buy limit order, just the reverse. And can be very, very helpful. But you do want to be careful with using both sell limits and buy limits, as well as stop losses, which is, guess what? The next one. So you want to be careful using all these, especially if you're using Robinhood, Webull, some of the Coinbase, not Coinbase, I'm sorry, Cash App, because those companies, the reason why they're able to sell, like let you trade for free, is because they're actually selling your information to institutions and hedge funds so they can see how you trade, what your style is. And it might not be you specifically, but a whole group of people, so that they can then maneuver and take our money and wipe us out. So you want to be smart. You want to be careful. If you're in a high volatility stock, kind of like AMC and GameStop and those meme stocks that we discussed in my previous video, you don't want to use these. Even a stop loss, that's up to you. I'm gonna say stop loss is up to you, because you don't want to lose all your money. That's fair, but just be careful. Just be careful, because you'll see. Let me discuss stop loss first. So a stop loss is you already own your shares. You got them in the market. You're doing your thing, and stop loss is actually a price point that you decide that you want to sell your shares at that is less than the current price. And the reason why you say, wait, why would I want to sell my stocks less than where the current price is? So stop loss is set up to protect your profits and your initial investment. Not everyone uses it. Some people do. Some people do a trailing stop loss, which is something we'll discuss later. But basically, it protects you. So if, say you got your stuff at $40, right? And your stop loss is at, $28, just in case. And then price just drops and plummets. You're getting out $28, even if price ends up going all the way down to 10. So it is a good way to save you some money and protect you from those wild swings. But also, it's a way to lose a lot of money too, because you're kind of telling the world, hey, I'm willing to lose some money. That's just my mentality on it. This is not financial advice. I'm not a financial advisor. do some research on it and see what works best for you. But again, stop losses. You'll see people talk about shorts and hedge fund ladder attacks, which we'll discuss in future videos. But what you'll see is you'll see a price going up organically, and then it's going to drop really hard. And when it drops really hard, what they're actually doing is fishing for stop losses, because they know people are like, oh, I'm making so much money, I'm making so much money. Let me protect my profits and put a stop loss right here. No, price is right here. And then as it's going up, boom, it will go down. Then it'll start inching up again because they already got your money, and now they're going to get the next group of people's money. Just something to be aware of. And that's it. That's our second round of FinBear Lingo. Please let me know what your thoughts are. Let me know what words you're curious about and little topics and everything. Please don't forget to hit like or subscribe or both. And please share with your friends and let me know how I can help you even more. Have a wonderful day, everybody, and let's go make some money.